This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all.
Alright, hello and welcome to Camel Finance. I'm your boy Camel and we have finally reached CPI day. So pretty interesting times. I'm going to point at a few things today, keep it a little bit light, point at some charts and show you what looks to be topping in terms of the cycles, what looks to be bottoming in terms of the cycles. And then as ever, we're just going to continue to let the trade come to us. Now, as a quick announcement, I'm not 100% committed to this yet, but I think I'm going to go live for CPI. The reason I say I'm not 100% committed is I don't really know if I can add a great deal of value since we're pretty much going to get a print that is in line with expectations, I think. And if it's in line, if it's slightly hot, 0.1 or 2% either side, I don't care. That's fine. And the reason I say that's fine is because, as we know, we're expecting this print to be a little bit sticky or perceived as sticky. And it's the following month's print when I expect to start to see the resumption of disinflation, the big surprise cold print and all of that kind of stuff. But just to go live and say, wow, I don't really care whether it's 2.9 as expected or if it's 3.0, 3.1, I also don't care. If it was 2.6 or 2.7, do I really care? No. I think what really matters is that we see resumption of the primary order trend into next month's print. So some of the members were asking me if I could do a members only live stream, and I think what I might do instead is go live for everyone, but just kind of ignore non-members comments and use it as a little bit of a hangout session for me and the members. If you want me to go live, let me know in the comments. It's just like I said, I'm not convinced I can add a great deal of value, and when I can't necessarily add value, it seems like a little bit of a waste of everyone's time, and often those live streams just descend into altcoin chart TA requests, which I'm not really in the mood for, to be completely honest. But as I said, right, let me know if you want me to go live, especially if you're a member, and we could probably hook something up. Oh, I need to stop here and say thank you again to Ken. This is day 3 of saying thank you to Ken for the very, very thoughtful gift that showed up 2 months after the date written on the letter. So Ken, if you're watching, thank you again. I know some people were saying, oh, do we need to do this every day? I think we do. And some of you guys kind of ruined it. And I say that because there can only be one Ken, but I've had at least 3 people claim that Ken says you're welcome, right? And I'm like, you can't all be Ken. And interestingly enough, there was a member who goes by the name of Ken in his handle who came out and said, my name is Ken, but it wasn't from me. So I'm just a little bit confused. Anyway, we're going to keep saying thank you for a few more days because why not? Now, as I often say, these are very, very wild times to be alive. Did you know ETH priced in gold now trading below a 1 ratio? What does that mean? It means 1 ETH is currently worth less than 1 ounce of gold. The Boomer Rock is actually outpacing ETH in terms of performance. This is pretty wild, right? The meme says a lot. Is there a big catch-up trade ahead? Maybe, just maybe. Who knows? I certainly don't. I tell you what, I know least of all. But I do see a lot of people that seem to have this problem, and I'm not saying it's this guy's problem, I'm not saying this pertains to him, I'm just using this as an example, right? But a lot of people are very quick to just car you with a hate brush for bad mouthing ETH, or any kind of altcoin, really. But understand this, I think just saying this is all just hate is a really lazy argument. I'm actually too selfish to hate anything. Hate eats you from the inside, and I love myself far too much to allow that. So I know you might think I'm hating on ETH, but in fairness to me and in my defense, I've been very, very consistent in saying I don't care for any altcoins whatsoever. So it's not personal, as I often say, it's business. And if you disagree, that's fine. But don't just say I'm a hater, right? Tell me why you disagree. Show me a chart that points the other way. Explain to me exactly what I'm missing. Although one thing I do think nobody had on their bingo card, including me, and I was bearish ETH right from the start, and I was bullish gold right from the start, and even I, if I'm being completely honest, did not really expect to get here seeing a $3,000 ounce of gold with Ethereum trading at 26 or 2,800. That's even gotten me by surprise, and I think it speaks to the complexity under the hood of this cycle. That's really why I'm bringing this up. Again, it's not to dunk or hate on anything, it's just simply to say, I bet you didn't think this was going to happen either, right? I certainly didn't, and I would wager you probably didn't either. Now, speaking of gold, we are seeing a run on the physical bullion. And over in South Korea, their mint has temporarily suspended the sale of gold bars. Things are starting to get very, very hot in the precious metal markets. I also wanted to pause here and make a point that I haven't made in a while, and that is this Basel III international regulatory framework for banks. There's one very, very interesting detail in this Basel III agreement, and that is they made physical gold a tier 1 asset, which is rated the safest for central banks to hold, while simultaneously making paper gold, ETFs, derivatives, that kind of thing, a tier 3 asset, which is classified as the riskiest asset for central banks to hold. So with this detail in mind, spend a moment to ponder what this really means. And at the same time, we're seeing London's bullion vaults run. We're seeing things like South Korea's mint temporarily suspending the bars. We're seeing all kinds of lending fee spikes in the paper markets. And on top of that, the world's second largest gold storage has suddenly a very long line to withdraw the bars. The Bank of England has increased from a few days to several weeks of wait time to withdraw the physical gold. Is it because they don't have it? It probably is, right? And again, mentioning this detail, what does it kind of imply? We're getting a bit tinfoil hat today. This wasn't really my intention. I've just kind of taken it here. But I think this kind of implies that we are slowly but surely watching the paper market implode, leaving only the physical holders at benefit here. Now, I want to be really clear, because as I say this, I know there's always some people that type in the comments, does that mean I should dump all of this? I'm not trying to fearmonger here, okay? Everything has pros and cons. For example, holding a paper gold ETF carries a lot more counterparty risk, which is a con, but it's also incredibly more liquid. You can just buy and sell it at one click off your mobile phone. Versus the physical gold, you have to pay a slightly higher margin on it, or a premium over spot, I should say. You also can't sell it at the click of a single button, right? It often takes a few days, especially if you've got a larger quantity. There's some other stuff to jump through. But of course, the pro to physical is that you don't have to carry the counterparty risk. It's also very difficult to store for many people. Some people prefer to use a vault. At that point though, we're still extending counterparty risk. So everything is trade-offs, right? And I know people are like, Camel, does that mean I should dump all my ETFs? No, it means you should make your own decision and factor in your own risk tolerances. But I do think what we're watching here is some of the most significant developments in the precious metal markets that I can ever remember seeing in my entire career. And as if that's not enough, okay, the banks are currently doing so well that they're borrowing even more money than they were back in the 2008 GFC. Okay. So I'm laughing, but it's because I don't know how else to react, right? It's not really funny, is it? But how else do you internalize this? Other than to, of course, have a thumbnail where everything's on fire and then a clickbait title and then try to doom monger and spread fear and all of that kind of thing. But realistically, I don't think it's the biggest problem in the world just yet. I do think later in the decade, it may well morph into something that's a lot bigger. But for now, it just seems to me like wild times to be alive. I am certainly enjoying the show. Also, remember the melt-up chart with Congress banned from owning stocks at the top in yellow? Well, I may have just found the mechanism by which we're going to see this implemented.
And also, could you mention some of the things that your team has found, some of the crazy numbers, including the woman that walked away with about 30 million?
Right. Well, we do find it sort of rather odd that there are quite a few people in the bureaucracy who have ostensibly a salary of a few $100,000, but somehow manage to accrue tens of millions of dollars in net worth while they are in that position, which is, what happened at USAID. We're just curious as to where it came from. Maybe they're very good at investing, in which case we should take their investment advice, perhaps. But there seems to be mysteriously they get wealthy. We don't know why. Where does it come from? And I think the reality is that they're getting wealthy at the taxpayer expense.
Okay, so there's that. Coupled with some of these individuals they are referring to have got preposterously large net worths relative to their salary. So I do wonder if the kicker here is this is actually going to be implemented by Team Elon. Yesterday, we also saw Powell speak, and he was out here telling us that we will never have a central bank digital currency, in line with what DT was talking about as well, banning the whole CBDC narrative. But personally, I'll believe it when I see it. I still think they're probably going to move in the direction of having something that is essentially a CBDC. It's just not on a blockchain, perhaps, or some other kind of spin on it. Perhaps it's decentralized. That means we can say, okay, it's not a CBDC, but it probably still has all the familiar symptoms of a CBDC. I see a lot of people very quickly willing to cling on to this whole thing, but as I said, I'll believe it when I see it. I really don't think we can just say, yeah, well, Trump and Powell said we're not having one, so therefore we're not having one. I don't think it's as straightforward as that, but time will tell. Something else that was pretty interesting is Powell also said that we would only use quantitative easing when rates are at zero. Again, this whole idea of the printer is coming, okay, it simply isn't. Not until we reach ZERP. And of course, at least at the moment, the Fed is continuing to be late and reluctant, and it is still the case that currently we are pricing in another pause in March. So until such times as we start slashing these rates towards zero, then there really will not be any sign of true and outright QE with Fed balance sheet expansion. Now, as Brett points out here, Typically speaking, QE historically always occurs only at 0 interest rates. It's just the difference here, as I said, is policy is currently overly restrictive and we are nowhere near scheduled to go to 0 as of yet. QE occurs only when rates are at or near 0. It was Ben Bernanke that made it clear QE is only effective with a 0 interest rate policy. And I know, as I said last week, everyone and his dog is out here stroking it to the idea that the printer is coming. And that's ultimately because they need their alt bags to pump off the back of QE. But unfortunately, you're going to have to wait a lot longer. QE comes when we're in a recession, when GDP is going down, inflation is low, we're in a financial crisis, unemployment is high, and interest rates are low. At the moment, we don't really have any of these. Slowly but surely, the market is working this out. Remember, it starts off contrarian, then the herd is right for a while, and then it's time to take contrarian stance to the other side. So far, though, so good. I also found this as massive news out of Hong Kong, as they have just confirmed that Bitcoin can be used as proof of capital for new investment visas, which is massive for Hong Kong, and they now no longer need to sell their Bitcoin and convert it to fiat, since Hong Kong now recognizes Bitcoin as proof of capital. We continue to see the dominoes fall, we continue to see adoption spread, we continue to see this thing move in the right direction for total world domination. We are going to now focus on some of the cycles and see what the charts say. We're right in that window for a half cycle low shakeout. As I've been saying for a while now, and I put a video out for members, the whole thing kind of reminds me of this from back here. I've been saying this for a while, maybe we get something akin to this. I don't think it necessarily has to come all the way down here unless that CPI print is super duper uber hot. But something like this I think is probably coming in the not too distant future. So we're right in that timing window for that to happen. And of course, if we don't break out, then we just continue to head for a cycle low and get the same trade on out of there. For the likes of gold, gold looks like it wants some kind of correction here. This is a very strong move, but the cycle low is not due for a little while. So long and strong there for now, at least. I do notice the dollar looks pretty heavy. It looks like it wants to top here. And of course, if it wants to top, which it seems to, the cycle is down, looking for a daily cycle and a weekly cycle low perhaps. That to me says we may well see that half cycle low yield upside performance for the stock market. It would also allow gold to continue to push for a little while longer before seeking out a daily cycle low. And for Bitcoin, we're still very much range bound. So what I really hope here is that we don't break out just yet. I really want to get into next week, because if we get into next week without a breakout, then any kind of swing or breakout, we can say with a very high degree of confidence, is the cycle low. Where this thing could potentially become a problem child is if we were to get a breakout this week, because then we wouldn't know if we've got an extremely early cycle low, which I don't really like the look of, I don't really want to have to entertain, or whether that breakout would ultimately need to resolve to a cycle low later in life. So I really don't want to have to deal with that kind of complexity. I would much rather see this thing just continue to stay underneath resistance, find a weekly and daily cycle low into next week, and then break out, and we can get underneath that with very high degree of confidence. Same for the crypto stocks and crypto miners, we'll get underneath those. I'm even going to be adding some, I didn't think I would ever say this, but I'm even going to be adding some of these crypto stocks, not just in the short-term trading accounts, but back in my longer-term accounts for the first time in the cycle, because the invalidation is super clean here, and we're expecting a nice quick double. So I'm even going to be adding spot shares to the longer term accounts out this weekly cycle low, which is something I was not planning on doing, but the opportunity is just too nice to ignore. So hopefully we can just stay underneath for a little while longer, get into next week, and then any kind of swing or breakout is me saying, yeah, that's it, weekly cycle lows in, time to double the price. I'm also noticing a huge amount of people out here are trying to call this the top and distribution. I just don't think we're there yet. So time will tell as always. As ever, expect chop, game, volatility, all of that stuff into the CPI as we see every week. If you want me to go live for CPI, let me know in the comments. And other than that, I hope you're doing well in life. And until next time, take care. All the best. Cheers. Bye.
Camel Finance, he's the man to see. Rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame. Sticking to his guns in his money game. He's a badass, oh yes indeed. Camel Finance got the markets key, taking us normies on a bump.